We track inventory and home sales very closely around here, but to be honest, the biggest surprise to me this year has been the resiliency of home prices. Given the unrelenting mortgage costs, generally weak home buyer demand, and the year's rising supply of unsold homes, I've been expecting home prices to recede a bit in the second half of the year, and they simply have not. That's probably an important lesson for looking into next year. All the dominant trends in the housing market this year seem like they would indicate home prices declining, and with just a few local market exceptions, home prices nationally will finish the year up again. In fact, home prices ticked up this week. The median price of the homes that went into contract this week, these are the new purchase offers with contracts pending, is now 6% greater than last year. As mortgage rates have spiked in the last few weeks, and as the price paid for homes creeps upward too, the mortgage payments required for the median priced home in the country are on the rise again. So affordability is not catching any break. We had a little head fake with cheaper mortgage rates for about a month, and that was it. Payments for the median price home in this country jumped by 1.5% this week. Don't forget, though, that even though home prices are higher than last year at this time, payments are 6% cheaper than last year at this time. Last year in the fourth quarter, and then again in May this year, home buying costs were at their absolute worst. So I don't know. Is that a good news? Maybe. At any rate, these market conditions can change quickly, and they keep surprising. And that's why at Altos Research, every week we track every home for sale in the country. All the prices, all the supply and demand, all the sales, all the changes in that data so that you can understand the changes in the U.S. housing market immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the data for the U.S. housing market at the end of October 2024. So we'll start with inventory today, and then we'll look at those surprising price trends I mentioned. So inventory ticked down this week to 738,000 from 739,000 last week. Our model had expected inventory to climb just a little bit this week. We could see another bounce up in inventory next week, but we're near the peak for the year. Inventory in Florida had an uptick with a bit of a rebound in the new listings after the storms are now past. So that's something to keep a note of. In this chart, each line is a year, and you can really see the seasonality change compared to how the market used to be. In the pre-pandemic market of the teens, inventory would peak in August and then begin declining rapidly each week by the fourth quarter. So in those times, you either sold your home or you pulled it off the market before the holidays. So the top lines on this chart, these are the years 2017, 18, 19, and you can see the downslope at the right end of the chart. This year has maybe only just peaked in inventory. So as a result, we're now only 21% fewer homes on the market now than at this point in 2019. Maybe next year, if mortgage rates stay in the high sixes, inventory will build closer to the normal after 5 years of severe shortage. If mortgage rates fall, say, into the fives, I expect that demand will pick up faster than supply and that inventory will shrink again. So keep an eye on that as we roll into 2025. Last year, when rates were rising to 8% in October, inventory was also rising pretty quickly, even this late in the year. So you can see the 2023 line in red here. Last year, the unsold inventory of homes on the market expanded by 1.5% in the last week of October. This week it fell. Inventory fell a bit. So as a result, there are now 31% more homes on the market than last year at this time. So remember, just a few weeks ago, we had 40% more inventory. Now we're down to 31% more inventory. Last year, the unsold inventory was piling up each week, and this year the market is much more stable. This year's interest rate moves are less than last year's, and the market is now shocked less than it was at that time. Last year, the momentum was obviously worse, and inventory was climbing and price reductions were climbing. Neither of these things is happening now. Of course, we haven't seen home buying conditions to be really optimistic about, but neither of those things are happening now. More stability. So let's look at new sellers this week. 2024 continues to have just slightly more sellers than last year, but fewer than we used to get in the old times. There were 60,000 new listings unsold this week for single-family homes. That's roughly the same as a week ago, and just 6% more than last year at this time. With the holidays rapidly approaching, the new listings volume falls off pretty sharply from here through January. This year's line, you can see, remains below the cluster of lines from previous years and just above the last 2 years, just slightly more sellers now than last year. There were another 9,000 new listings immediate sales this week. These are the homes that got listed for sale, take offers, and go into contract within just a few days of listing. They're already in contract, so they don't add to the active inventory. There are immediate sales in any market. The best homes at the right price always go quickly. But the immediate sales pace is now down significantly from the pandemic times, and it's an indication that home buyers don't see any urgency in making offers. Overall, the days spent on market is 24% higher now than a year ago, 66 versus 53 days. And that's because, there are fewer immediate sales and then longer on the market for those that don't sell immediately. When you add it all together, there were just 2% more sellers hitting the market this week than a year ago. So just 2% more. So I mentioned that, Florida rebounded this week with sellers that postponed after the storms. Texas and California new listings volume is ticking down as you'd expect for autumn. So there are slightly more sellers this year, but inventory was building faster last year. That's because, of course, buyers were stopped cold as mortgage rates reached 8% last year. Today, on the HousingWire Mortgage Rate Center, we see the average rate lock coming in at 6.7% today. So on to home sales. The sales rates are holding up pretty well given the recent disappointing trends in the cost of money. There were 59,000 new pending home sales for single-family homes this week, with another 12,000 condo sales. The sales rate is inching lower for the season, but still performing better than the last 2 years. That's what we're looking at here. We tracked 9% more sales started this week than last year at this time. October of the last 2 years was really rough for home sales. The NAR headline last week reported their estimate of very low home sales in September again, and it'll be interesting to see if their methodology for estimating home sales catches up to the real-time numbers here when they report October later in November. We'll see if they can catch up. Home sales are not strong, of course, but we can see a little maybe normalization. Mortgage rates are 120 basis points lower than they were a year ago, and sales coming in a little better each week compared to last year as a result. Remember that the data we're looking at here are the homes that are going into contract in a given week. So homes take 30 to 40 days to close. So these will be mostly closed sales in November, and you'll hear about that in the headlines in December and January. The takeaway for home sales each week is looking better than the last 2 years. At some point, this momentum will show up in other headlines. It's not a lot of sales. Home buyer demand is still very soft, but it is better than the very bleak Q4 of 2023. Okay, now let's talk prices. As I mentioned, it's been surprising, especially in the second half of the year, how resilient home prices have been. As home buyer demand has stayed muted, supply of unsold homes is built. I've talked about rising inventory, slightly more sellers each week, longer days on market, fewer immediate sales. Given all this data, you would expect that would mean that prices would be subsiding at least a little bit, but in general, across the country, home prices are not subsiding. So for a while late in the summer, you could see that expected price trend as the market just stayed so slow late in the summer. Then we got a little boost with cheaper mortgage rates in November, and that's when we had this surprising strength in the sales prices. These are the homes going into contract. So the way to look at it, I suppose, is home buyers are buying homes at these prices. See this year's line where the prices are staying around $390,000? That's the median price of the new pending sales here all the way into late October. So compare that to the price curves of either the last 2 years, fourth quarter 23 and especially 22, and you can really see how much more stability is in the market now. I've said it this way before. Consumers are more sensitive to changes in rates than they are to the absolute levels. So in 2022, interest rates jumped 500 basis points and home prices dipped. This year, they're up in the last few weeks, but they're down from the peak. I think that's the reason we're seeing resiliency in home prices. Consumers, both buyers and sellers, are more sensitive to changes in rates than to the absolute level. And there's less change this year, finally. The median price of the homes newly in contract this week is $389,900. That's up a fraction from last week and is 6% more than last year at this time. You can see that price gap at the right end of this chart. These are the prices for all the single-family homes that went into contract this week, 59,000 of them. These are not yet sold, as I mentioned. They will close mostly in November. But this is the earliest proxy for the sales price. And we can see exactly when sales prices are dipping because they dip here first in the pendings. Prices are not dipping now. The median price of all the homes on the market is $439,000. That's down a tick from last week and is slightly above last year at this time. If you walk into the housing market today and you want to buy a home, $439,000 is the median price. The sweet spot that people want to buy, of course, is always slightly less than what's available. So one fascinating insight about home prices this year is that sale ask price ratio is much tighter than it has been in the last 2 years. In other words, buyers are showing their willingness to buy at these current prices. I may spend some more time on this price signal, this price sale to list price signal in the November webinar when we have a little more time in a few weeks. So we've been exploring today how the price signals keep defying my expectation. And so the leading indicator of future sales prices are showing this similar pattern of price stability. As of this week, 39.5% of the homes on the market have taken a price cut. That's up just a tiny fraction from last week. It's basically been unchanged for 12 weeks. So this year's dark line, see it bouncing along the top of the chart here? Price reductions, while a little elevated, are not climbing. There are slightly more homes on the market now that have taken a price cut than last year at this time. And I think this relative stability, though, reflects that sellers are no longer surprised by this market. As I said before, consumers are more sensitive to changes in rates than to the absolute levels. So yes, rates are higher than people expected at the beginning of the year, but they've been pretty stable compared to the last 2 years. The big change in rates was 2022, 2 years ago. Despite those of us shouting about how sellers would need to get ahead of the changing market, many sellers were nonetheless still surprised, overpriced, and had to cut their prices in the third and fourth quarter when mortgage rates jumped again. So that 2022 line here is so clear on this price reduction chart. So it's also true that most home sellers continue to be in a position of strength, and this price reductions data is a good illustration of that fact. If your home is on the market and you're not getting the price you want, you can cut the price or you can withdraw the listing to try again in the future. So withdrawals are a significant factor here, and we'll share the latest withdrawal data in that webinar in a few weeks. So it's wild how quickly the sentiment can change. And as of now, 2024 looks like home prices are holding firm nationally. Inventory is roughly peaked for the year. But what if strong economic news drives mortgage rates back over 7%? Like, we know that buyers can put the brakes on very quickly. So potential buyers and sellers need to hear the data from you so they know how to act. If you need to advise people in the real estate market, you should join us at Altos. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the local market with your clients and prospects today. There's a link in the description below to join us, so click that and let's get started.